Promotional versus preventative biases, part 2. In a previous video, we discussed optimism or pessimism biases, or preventative or promotional biases, as they're often called, that are present in the literature, which essentially refers to a disposition that traders may have with very opposite behavior and very different outcomes in terms of what happens in their trading results. We focused in the last video on promotional biases, and this one will look at the qualities and challenges with a preventative bias. And of course, as before, if this resonates with you, then of course it's a first step. Awareness is the first thing that one must have, and then put in place things to correct any mismatch to bring you close to that central point. So the qualities are: they are less likely to be subject to minimalization bias and make sure every box is ticked before taking action. They only act on thorough knowledge that will tend to follow through on education and ask questions to double check knowledge. They tend to stick more rigidly to pre-planned risk levels, and they tend not to over-position and over-trade, which means they are often less hurt by sudden opposite market movements. Additionally, and positively, they exercise more caution through testing thoroughly when exploring other trading instruments or strategies. However, the challenge for those with a preventative bias can be quite disabling and quite impactful on results. They are more likely to talk themselves out of trades and find reasons not to take signals or take profits way too early. They often take a succession of losses harder and may take longer to bounce back, not being as resilient and optimistic as the trader with a promotional bias. They're less likely to try new strategies on new trading instruments, which can be limiting in terms of opportunities, and they may be prone to avoiding assets that are trading at all-time highs. They're less likely to scale and so are likely to have a smaller trading account with smaller risk for a prolonged period of time, and may take a considerable amount of time to move from a demo account to a live account. Will overlook for counter evidence or counter opinions in longer term fundamental ideas, again meaning that they are less likely to take action, and may be unjustifiably underconfident when actually many of the things that they're doing may contribute significantly to developing into the trader they can become. I mean, if you look at the qualities on that side of this slide, you can see how these can serve you well. If this resonates with you, then of course you need to find some things to put in place. And one of the things you can do is to go back to the previous video, look at the qualities of those with a promotional bias and start to work on those. If you identified in the first video you've got a promotional bias, look at some of the qualities of a preventative bias and start to look to put some of those in place.